Welcome to Alpha Wolf's Den. It's here that we seek enlightenment. Alpha Wolf Trading recognizes that the most successful companies in the world at one point had no earnings. There's a lot more to a company than just its earnings report. That's why here at Alpha Wolf's Den, we interview executive teams. We want to get to know management. We want to understand the vision, the mission, the strategic drivers, the plan. We want to separate fact from fluff. This is not a paid for promotion interview. This is solely wanting to know the company's vision, mission, their critical success factors, their strengths, their weaknesses, their opportunities, and the threats. We want to know the long-term objective and the tactical initiatives that leadership plans to implement to achieve success. We want to know about the company's debt, the cap structure, what it's going to take for them to become self-sustaining and stop burning through cash. We want to know management's previous failures, challenges, hurdles, how they overcame them, or what they learned that they can apply in their current role. We're trying to identify the risk and the reward. And oftentimes, it's strong leadership that makes the difference between success and failure. Here at Alpha Wolf Trading, we are looking for the hidden gems. And I hope you enjoy this interview because this is one of those companies that I think could be a hidden gem. Please understand that this is for educational and entertainment purposes only. This is not financial advice, and I am not a financial advisor. Any investment that you decide to make in any security should be based upon your own due diligence and opinion. Forward button here. What's happening, everybody? Tim from Alpha Wolf Trading coming at you. I've got John Abrams, the CEO of Venzee. And this is actually a relatively new find for me, but I had a meeting with John, I think it was a couple of weeks ago, and very, very good conversation and a very good product at a very good time. So it was one that I definitely wanted to follow up on. Venzee is the name of the company, and then the ticker symbol on Venzee is VENZF, which is traded on the OTC exchange. John, thanks for coming in.
Yeah, great to see you.
Good to see you. So listen, exciting story I think you have here, right? Why don't you tell us a little bit about yourself, give us a little background, and then tell us about what Venzee's vision is and what product they have.
Sure. So I've been around supply chain for my entire career, so 20 plus years. And with Fortune 500 companies. So McDonald's, I helped build out the supply chain for Asia Pacific, did a lot of the innovation and growth at McDonald's back in the day. It was part of the strategy group and did some consulting around supply chain and went back into Fortune 500 with Cardinal Health, which is number one, number two medical products pharmaceutical distributor in the US. So I was responsible for the medical product side, just to give you a sense of size and scope. Managed about 600,000 active products and knew something about 1.2 million. 600,000, just to give you a way to put that in perspective. If you walk into a big box retailer like a Home Depot, they might have somewhere between 35 and 50,000 products that they touch. I handled 600,000 products. So the challenges of managing all of that product information really outpaced the systems that were available to me. And as a $120 billion annual revenue company, I could afford to pull in any system that exists. And the reality was I could not find systems that did what I needed to do in the supply chain. And this is 10 years ago. And so I struck out to, who are the innovators? Who are the new companies doing this? Found one in Chicago, joined it. As soon as we landed our first big client, LG, we got bought for 25 million bucks, and I had to find a new horse to ride. I happened to find a company that the founder is a cryptocurrency. She's not with us anymore, but she was a cryptocurrency blockchain AI person. So doing really innovative things in the cryptocurrency trading space. But her platform, she thought it could be used to broker different parts of the supply chain. So from manufacturer to retailer, doing that with some artificial intelligence, being able to encode that in the blockchain, some really advanced stuff from outside of the supply chain industry. I met her, joined up, took over the company in 2019, and we've been building the foundation for really what is going to be a really dramatic expansion for us in the supply chain space.
Okay, so let's see. I don't know if anybody's heard anything about supply chain issues in the last couple of months.
No, it's been a very quiet industry.
But I think I hear about supply chain concerns, issues about, I don't know, 10, 15 times a day for the last, it seems like a lot longer than I thought it was going to actually be. It just seems to keep hanging around. COVID, of course, is not helping. But so, as I met with you the first time, I said, Jesus, could you have a better hot button, sector to be involved in right now? But this isn't something that you just came up with in the last few months. This is something that you've been trying to put together for quite a while, right?
Oh, yeah. So I've been 7 years at the sort of the startup stage in this space. To give you a sense of why supply chain is in the news every day, most of supply chain is not digital. It's on paper, it's analog, it's very human dependent. So when there's anomalies in the supply chain, such as what a pandemic will cause, all of the response is manual and human. And so you get these wild swings in response and demand patterns and things like that, they sort of like a ripple in a pond, they spread out endlessly. And so recovery from these challenges from the human side is going to take a long time. And what I've always believed is that if you digitize this, if you lean into the data, if you apply some artificial intelligence and some machine learning, you can dampen these crazy swings in the supply chain. And by the way, this predates COVID or the pandemic. These are problems that, when I was at MIT, we would talk about things like the bullwhip effect. So a minor deviation in supply or materials will cause these massive ripple effects further down that whip or that chain. And so we're seeing that play out in spades across the supply chain today. But the antidote is not more human labor. The antidote is get more into digital strategy, apply better tools, put in some AI, such as what we offer, and that's how you become a more resilient supply chain.
See, I mean, I'm just thinking about the way that I mean, if you're in charge of, I mean, anything in terms of supplies through this pandemic, I mean, how do you gauge what you need? I mean, without, over buying, right? I mean, this would be a very challenging thing. I don't care what industry you're in, right?
Right.
How do you know what to order, how much to order without getting overdone and then winding up with a bunch of inventory that's going to sit there? I mean, that would be a very challenging thing for me, right?
Well, and especially in the way you phrase it, so you pull in human behaviors. So if there's a game we played at MIT, the beer game, and essentially it calls out the human behaviors that we all have, which are, if you see potential challenges, you hoard. It's a natural human instinct. So, golly, I might be out of beer cans.
Or toilet paper.
Or toilet paper. Well, what a great example. That is the beer game applied to humanity on a global scale. So what happened when people started thinking there was going to be a shortage of supply chain? Everybody, I don't care who you were, you went out and you bought more toilet paper than what you needed, and it created this massive shortage. It doesn't mean that there's not enough toilet paper on the planet. There's plenty. It's just you had this demand swing that couldn't be compensated for. So something like that is hard to automate out of the supply chain.
Right.
But when you talk about pure supply chain, so factory to retailer, for example, there are elements of that can and should be digitized such that you can take out human frailty and make that a better engagement, a more consistent, more reliable path for data that satisfies the retailer and ultimately the consumer.
So I'm just curious. So, let's say that your software was in place, pre-COVID, and then all of a sudden you get this event that happens. How does the software react? Does it balance? I mean, how is it going to, I guess, input that data, right?
Yeah. So we focus on a very, very specific part of the supply chain today. It's the interface into retailers. And often that is a poorly managed function. And so the ramifications of not having our software, and you've seen this when you buy something online, you'll get a picture, an image that doesn't maybe match up with the product, or a description that doesn't match up. And so there are these interesting little anomalies that happen all across that manufacturer's retail interface. And what we do is we mechanize that. So you plug into our system on one side, if you're the manufacturer, we have some AI in the middle, and we translate that information to any number of downstream retailers. So what we do is we're not really focused right now on demand patterns or any of that. We're focused on getting the information accurate from the manufacturer to the retailer. That's a big deal because inaccurate information drives returns. Returns provide all sorts of chaos in the supply chain. So, when people were talking about there aren't enough shipping containers these days, well, if you took out just the returns shipping containers, you add a whole bunch of stock back into the supply chain for that part of the area. So I'm not trying, and I don't want anybody to be fooled that we're going to come in and automate the entire end-to-end supply chain. I know enough about supply chain to understand how complex that is. We can make a lot of money and do a lot of good automating and mechanizing with AI one very important part of the supply chain, and that is the digitizing the interface to retail.
Got it. Okay. So I'm just looking at your example here. So you've got consumer. So from a brand standpoint, right? So you just brought something up that, let's say I put something in and it's a specific brand, right? But then all of a sudden I get maybe a different brand of the same product, but it's not the brand that I actually was looking to buy. I mean, that does happen, right?
Sure.
Or you get the recommendation to look at this other one. Is that something that you guys would be tracking for a brand or no?
So what we do for a brand, so the example you've got up on the screen is a shoe manufacturer. So the problem that a shoe manufacturer has today is there are actually sales reps at that manufacturer, and they manage all of the retail channels. So big box stores, online stores, all of that. And what happens today without automation, without a digital connection, is that often those salespeople are cutting and pasting product information to feed it to the different sales channels. And what happens is you get inaccuracies, you get laziness or fatigue, or just, this isn't my job as a salesperson to be cutting and pasting product information to a new retail channel. There are, even during the pandemic, there are on average 8,000 new retailers that open up in a given month. So you think about it on a global scale and different sizes and how easy it is to establish a retail selling presence in a digital age. You get all these new channels. So if the salesperson is manually required to feed that information, you're going to get all sorts of anomalies. So it's not so much whether a brand is getting a good response on that Google search for a shoe. It's that brand wants to know that their product information is pristine, it's accurate, it's as they intend it to be, because that brand puts a lot of effort into making sure that shoe is communicated, staged, described in the right way. And it all falls down at this human interface between a salesperson and maybe a new massive retail channel in, say, India. And that person's just like, look, I don't want to try and figure that out, so I'll just ignore it or feed it bad information. And that's where the dissatisfaction comes from.
Got it. Okay. And so your system or a solution that you are offering is a software as a service business model, right?
Yep, exactly.
Recurring revenue model,
yep,
which happened to be one of my favorite models.
Good, glad.
So you recently just announced that you had a goal, right, for sales, and I think you guys just announced the other day that you achieved that goal, right?
Yeah. So when I took on the leadership of Venzee in 2019, we had a very small team and we had a good tech platform, but we had to make some changes to who the personnel were. We put in our own team, so we built that out quite a bit. And we, in 2019, said, look, it's going to take us a little bit of time to ensure that the platform, the tech, is as it needs to be for what we want to do with it. So 2019 and 2020 were get the tech fully functional. There was a whole bunch of effort put in before I showed up in 2019. That's all good. It's probably to build what we have is probably a 10-year effort and millions of dollars of technical investment. So there was a lot done before I showed up. So 2019, figure out if we have any gaps, make the necessary changes. 2020, sell a few customers. Can we demonstrate that the platform works? And then 2021, we set a goal of 2,000 active connections. We call them mesh connectors. So can we get to 2,000? And can we get to a portion of monthly recurring revenue of that 2,000? We set that target at just under 200,000 a month. And we exceeded that, both on the number of sold mesh connectors and the amount of revenue that we took in by the end of the fourth quarter. So we're really excited to be hitting our stride as quickly as we are. We've got a huge goal for 2022. We want to be up to 13,000 mesh connectors and really healthy MRR on that.
So with the supply chain issues that occurred because of this whole COVID situation, what was the temperature like out there prior to when you were going to call on these customers, and then all of a sudden when the supply chain issues started to present themselves, I would imagine if you had some that were cold, they might have warmed up a little bit.
Yeah, so I would say that any decent sized company now, if you've got a board of directors, your board of directors is telling that leadership team to prioritize getting the supply chain right. There are so many different aspects to that. So we focus on one very specific aspect, but we've got a team that, we're all seasoned supply chain veterans. We know this business. There's a lot of folks that engage with us that want to hire us for consulting because they need such massive help. We're not going to get into that business model. I've done consulting in the past. It's an interesting business model. It's not for us. We want to remain a pure play SaaS model platform, selling AI on a monthly basis to people that need that level of tech. I will tell you that the early, pre-COVID, pre-pandemic discussions, it wasn't so much that the story was hard at the sales point. The story was hard at the investor level. So when I would go to, we're a Canadian funded company for the most part. We haven't taken in any US capital. We're headquartered in Vancouver, Canada. We have a US office for payroll out of Delaware. But when I would go to investors and I would say supply chain, you just watch their eyes glaze over. What does that mean? So customers, no problem. They understand the issue and they know how we fit and they know what we do. Investors, that was a more elongated discussion. It's not an elongated discussion now. Investors call us and they say, wait, let me get this right. Your AI for supply chain, how do I get in? So COVID changed the investor posturing more than anything else.
Well, yeah, and I think that makes a lot of sense to me because, that's you get these guys that it's like, okay, who's as soon as something pops up, it's like, okay, well, who's in that space and who's the player? And there's really not. There's a lot of logistics companies, right?
Oh, sure. Yeah.
There's a ton of logistics companies, and that's part of the issue, but it's certainly not all of the issue, right?
No, logistics, and I'm in Chicago, so there's a lot of cutting edge logistics firms here. Project 44 just got a bunch of new cash into it. They're looking at a valuation that's in the multiple billions now, which is great. Coyote Logistics, Redwood, a whole bunch of logistics players. Logistics, just for folks to get a good sense of this, it's the moving of the box. So it's how you put something on a pallet, how you put that pallet on a truck or a ship or what have you. And the reason that there is so much energy into logistics, and this happened long before the pandemic, is that whole logistics system was paper-based. So what you've seen over the last, I'd call it 15 years, is a massive amount of investment to move from paper to digital in the logistics side. We're the next wave. We're how you set up your product for sale, how you get that digital information to the selling channel, and how you satisfy a consumer with really pristine, advantaged information on your product. So we are adjacent to logistics, but you can look at the amount of investment that's gone in over the last, call it 10 years. It's significant and it's driven up valuations of small companies tremendously. We're the next wave of that digitization of the supply chain. Okay.
All right. So let's talk about this slide that I have up here. You've got speed, 80% more efficient, low cost subscription, $250 per month. Venzee automates costly data distribution process, and then scale, which is infinite, right? So kind of dumb that down for me.
So three very different points on the speed, 80% more efficient. What we can now demonstrate, and we do this with customers all the time, we take their existing process of setting up a product, and there's a function called mapping. If you're, let's say we'll pick on the shoe example again. Let's say you're a large shoe brand. You have a bunch of attributes that describe your product. So how big is it? What color is it? What material is it? All of these product attributes. There can be thousands of product attributes. You call all of those attributes what you as a shoe manufacturer call them. When you go to set that up at a retailer, say Walmart, Walmart calls those same attributes what Walmart wants to call them. and so there's this gap between these. Let's assume it's a gorilla, a big shoe brand. You're never going to get that big shoe brand to comply with what Walmart wants to call all of those attributes. So what we do is we sit in the middle with some AI. We know what the retailer wants to call, say, product description, and we know how to ferret that out and pull that out of the data at the large shoe brand. So what our AI does is it looks at literally billions of lines of information, and it says, we know what Walmart calls product description. We know what large shoe brand calls product description. We correlate that. It's called mapping, and then we pass it along. If there is a disconnect, something we don't know on one side or the other, we can flag that. And we have a team of people that can look at the anomaly or what's been flagged and reconcile that. Our AI then learns for the next pass with maybe a different brand, how to resolve that specific anomaly. So when we apply that into an existing process, we are 80% more efficient on average than what they're doing today. That's huge. The price point, as you mentioned, you can get that efficiency. You can buy that AI for $250 a month per retail channel. So you're getting huge advantage, 80% increase in efficiency for $250 a month. The scale, when you say scale is infinite, if you want to connect to a new retail channel in, I don't know, India, tell us what that channel is. We either have it on our platform today. You can go to our platform. You can actually buy from our website a channel, which is unique in the industry. But if we don't have one, you can submit that as a request and we'll fire that channel up. Takes a little bit of time. We have to figure out if it's a legit retailer, where they are, what the input process is, if it's an API, what have you. But we can bring that online in a matter of days, typically.
So you're
infinite scale.
So this is a global.
Oh yeah.
This is global software solution. This isn't a U.S. thing. This is a global thing.
And we have a global team. Our tech people are all over the globe. Our sales office is in North America, but we speak lots of different languages. And this is the thing about being that translation engine. We don't care what we're translating into, because all we're doing is matching whatever you call in whatever language, product description or color or size, to whatever the other point calls that in whatever language they want to use.
Really? So, I mean, in all languages, this software is effective in. Doesn't matter.
We're the Rosetta Stone. We match one thing to the other thing.
That's a pretty big. What would you suggest is the total addressable market on this?
That's an interesting question. It's a decent sized market, but what we have done to date is just look at the previous iterations of this, of what our platform is. So there's a whole bunch of companies that get into what's called EDI. There's a bunch of companies that get into data pool. So there's several $7 billion of addressable market if you look at the history of the legacy players in the space. It's very hard for me to we've done some modeling on this. The numbers just get so large that we don't necessarily want to believe them. So if you just look, we're a decent sized company, just given the modeling we've done on the existing space. But I think it's pretty, especially given most of our competition is North American based and we're global. I think this is it's a pretty greenfield opportunity here.
And so you've got, let's just go back. I mean, you worked on this for 7 to 10 years, you said. So, or you've been kind of working. Yep. So you've got a pretty big head start, right? I mean, for anybody to catch up would be pretty challenging, right?
Yeah, we don't think that, we don't have a lot of intellectual property protection. And, I've never been a big fan of that. Anyway, in large companies, I learned the value of that, and there is some value, but our advantage is that we're so far ahead of even the legacy players in the space with our AI that we'll own the vast majority of this market before anybody from a cold start builds this out.
So the beautiful thing about the AI is that as you sign on more customers, you sign on different brands, you're just building that data and that artificial intelligence, and it's getting smarter the whole time.
Yep.
Right.
Yep.
Which keeps you even more ahead of the game. Right.
Yeah. Yeah. And we've done a good job when we started working with clients in 2020. Some of our early clients were they were in the space of, say, ERP. So people that have platforms that serve hundreds, if not thousands, of retailers or hundreds or thousands of brands. And some of those companies, our early partners, got bought and they're not available to us anymore. But before they got bought, we sucked in all of their information. So we learned early on how to take in and digest that information into our platform, into our AI. And so even though those folks are no longer partners because they're now part of a competitive offering, we learned early on and built out that AI advantage. So you're quite right. There's a big hill to climb, not just in building the platform to run the AI on, but in feeding it. That's the big deal.
Right. And what did you say? You said 2,000 was what your number was for this year, and then for next year it's 13,000.
It is. Yep.
That's a hoe bag, right? That's a very audacious goal that you have there.
Yeah.
All right.
Yeah. We're a public company, so I can't reveal things that we haven't already published, but I can tell you that given what we have in negotiation right now, what's in our pipeline, I think we're going to exceed our target for this year. That's the 13,000 target. So we're really excited about this year. We built out a sales team in the back half of 2021, and those folks are they're hitting it, and we're very pleased with their progress.
So the COVID is not, the resurgence isn't really impacting you right now?
Yeah, the only way is, so I can't tell if it was holiday time or we were kind of hitting the peak of the current variant of COVID in the fourth quarter, late in the fourth quarter. And there were entire teams in some of our clients that just were all out sick. So were they out sick because it was tied to the holidays, or were they really sick? I don't know, but I would say that COVID didn't help us at the end of the year. I think we could have closed more deals if everybody was healthy and at work. They're not physically in the office for the most part, but we knew it. We heard that from teams. We did have deals kick into this year that should have closed legitimately in 2021. But I think that's a blip This wave was not as torturous on the health side as the previous wave. So I think we're kind of winding down. People are coming, into the engagements in the right way. Or we're second week of January, and we're busy as heck.
Okay, all right. So the first. Just real quickly on you personally. I mean, you gave me your background, but so this is your first go around as being the CEO of a publicly traded company, right?
Yeah, the advantage I have, I was in strategy in large publicly traded companies for a long time. So, I know how good companies are organized. I know the power of culture. I know the power of the right team. So, this is my first time at the helm of a publicly traded company, but all of the rigor is not foreign to me.
Right. So I think one of the things that really stood out to me from our first meeting was I got the sense that John is not a guy that is going to go down without a fight.
Fair.
And if he's got a goal, he's gonna do everything in his power to make that goal happen. Right?
Yeah. That's very true. Yeah.
I mean, that was just my quick take.
Yeah. And I don't know if that comes from learning that in large companies. Large companies often will set really bold goals, and you have to achieve them or the street beats you up. So I understood that, but I also had an upbringing from a hard driving lawyer father about what success means, and so I'm a good Jesuit educated kid who grew up in a gritty part of Chicago. Tough Irish guy. We're not going to lose.
Well, I love that. These are the intangibles that you're not going to get from a conference call, right? I mean, this is knowing the person. I think is much. You can have a great product. You can have a great service. I say this all the time. You don't have great leadership, I think the odds are stacked against you. Okay. That's my personal belief. Okay. And that's why it's so important for me to meet with leadership, because if I can't have this conversation, if I can't look you in the eye and ask you tough questions and see how you respond, then, how can I have full confidence and faith that this is a good place to be investing my money? Right. Does that make sense?
Yeah. And let me just give you a quick story on that. If you had told me 5 years ago, John, you have to run this department remote. You're never going to see your people face to face. Do you want to take on this challenge for several years where you're not ever going to be in the same room? You're not going to be in front of a whiteboard together. I would say that you can't build a strong culture that will achieve its goal. I would have said that. What I can tell you today is that we have people on our team. Amazon and other companies come to recruit from our tech ranks. And that's part of, we're an AI company. People know it. They know we have resource, and people come by and they'll offer a lot of money. And we had a woman on the team within the last 14, 15 months or so. She got recruited by Amazon, offered her a great job. And she called me up and said, I don't want to leave. I've never met this woman face to face. I know she's on the team. She would be on our calls. She said, I don't want to leave. And I said, you have to leave. If Amazon comes calling, you go take that opportunity. You can come back someday, but you got to go take that opportunity. You're young, you're smart, go do it. I had to threaten to fire her to get her to go take the opportunity. And what it came down to is we have built a culture during a pandemic that is as strong as any culture that I've ever been a part of. And that is, it's not just my leadership. We have the right people in a number of departments, operations, tech, all of that that know what they're doing, and people don't want to leave this team. It's impressive.
So that's exciting to hear. I would get the sense that being part of this and then having this be such a in your face problem right now, right? And being part of a solution has got to be a pretty magical feeling, right? And then I think also, if you're part of that, you're also thinking, Jesus, if we really hit this thing, we're going to be like all rich, right?
Yeah, look, I'm not a greedy guy, but I do think people understand just how transformational this is. I don't know that everybody on the team has had experience in supply chain. We've hired some folks that come from healthcare now. So, were they really in the supply chain rigor? Don't know. But yeah, the people that have been in this space for a while, they know the power of what we're doing. And it's not, it's not, as they say, a flash in the pan. We have something that is fundamental to how companies build resilient supply chain. We're focused on a very specific part of it. We're going to grow that out, and we're going to make some real money.
All right, so let's see. First wave, standardized EDI attributes, pulled GSI product attributes, infinite consumer retail scale. So what exactly am I looking at here with these three slides?
So what you're looking at is the evolution of, I would say, digitization data in the supply chain. The first wave, and there are some pretty massive companies that came out of the first wave. And these companies, they've been public, they are public, they've been acquired by people like IBM. All of those companies were focused on really the fundamentals, the standards of logistics in the supply chain. So EDI was a digital means of communicating, hey, there's a shipment inbound to your warehouse. It looks this big, it has this many pallets. There's a whole bunch of details around EDI and the standards that existed around EDI that have led to improvement in shipping and warehousing, in fulfilling products. Those companies are founded on the architectures of standards that were built out for the Berlin airlift in 1948. So if you think about this, I think we've got three companies listed on that slide.
Yeah,
if you add
Sterling
up the
Commerce, which is IBM, right?
It is.
SPS Commerce, SPSC, and then OTEX, OpenText.
Yeah, so OpenText, Canadian firm, publicly traded. SPS Commerce, publicly traded on the NASDAQ in the US. So big companies that are architected, kid you not, 1948.
Wow.
That's great. Look, the Berlin airlift, it did a lot to save Berlin in 1948, and it is the foundation of those companies. Great. That's wonderful. We compete with those folks. There's no logic that I can find that says 1948 standards framework versus artificial intelligence. Just forget it.
Right.
Why are we competing with these folks? The second wave on that slide comes out of the automation of checkout. So another wave of technology, and we've got three large companies listed there. One, WorldSync, now Battery Ventures. They were bought a couple, 2-3 years ago now. Salsify, which is the most modern of these middle wave companies. They're in Boston. They've taken in $400 million in investor capital over the last several years. And then Syndigo, which is based here in Chicago. They've had a couple of private equity groups in there, and they've bought 15 different companies over the last 2+ years. So a lot of money, a lot of capital. All of those companies are architected on some technology that built out the original barcode. It's a data pool solution. It is a database. It is, You feed stuff in and you manually extract that. That, again, compare that to artificial intelligence that takes the information in, learns, and then makes actionable decisions itself. No database, no need to feed and extract input. The technology does it for you. So those first two waves, that's a lot of good technology. It's really done a lot to mature the supply chain. But until we get to the type of interaction that we're offering with AI, the supply chain doesn't really improve.
Right. It's a matter of what's the definition of insanity when you
doing the same thing,
doing the same thing over and over again and expecting a different outcome, right?
Exactly. So we're competing against folks that are architected in 1948 and 1974. There's no competition in my mind.
All right. So connection to any retailer at Venzee. So Venzee provides the most efficient digital path, more than 400. So I'm looking at your list here. You've got Home Depot, you've got Kohl's, you've got Lowe's, Target, Petco, Dick's Sporting Goods. I mean, there's some big names on this list.
Yep. And I think when we built that slide, we were only at 412 connections, where we've added another 100 in the last month of 2021. So we're over 500 offered channels today. And we're building them out now based on client requests. So originally we were building out based on who we believed we had to connect to. Now clients are telling us we need these, and we build those out very rapidly.
So when they sign up for the 250 a month, that's one location, right? Is that the way I'm viewing this? It's one location.
It's one mesh connector, which is a retail channel. So if it's Home Depot, it's to move data to Home Depot, it's $250 a month. If you want to add Walmart, give us another $250 a month. By the way, that's very much more efficient and less costly than hiring people to do the same thing.
Oh, yeah, I would think.
Yeah.
All right. So 250 a month. Now, is that for like just a scrubbed down like version of, I mean, do you have other capabilities that, no?
Nope. You get the whole thing. If your product catalog has 20,000 items in it and you need to move that to Walmart, it's $250 a month. And you want to put 10,000, 50,000, we don't care. Just so people who hear that and then they think, oh, you're giving away the store. We're on AWS, so we live in the Amazon cloud, and we have looked at the amount of additional CPU or compute horsepower it takes to move 50,000 to 1 million SKUs, and it's literally pennies. So it doesn't make any sense to us to price based on the amount. We want that if you're a brand, you want to move all of your product information to every channel we have, and we're not going to ding you on weight.
And then if this brand is doing that with some retailers, I would imagine if the brand is big enough, they could have influence on any retailers that aren't currently using it.
We are seeing that already. Our pipeline of retail engagements has grown dramatically between third quarter and today, dramatically. So something is happening organically with retailers who are getting our product information or getting product information through us, where the retailers are now reaching out and engaging with us, and they're big names. And it's surprising. We have not marketed to retailers. We know how to talk to them. We know how to connect to them, but we haven't tried to sell them. And now they're coming to us saying, hey, how do we form a relationship with you?
Because of the efficiencies that you're providing with these other brands, right?
Yep. That's what they call a virtuous circle.
Right. It makes sense. And so let me ask you, on the $250, I mean, I was thinking it was per location. Like if it was Home Depot, it's $250 for the, how many stores they have, but it's not. It's just a Home Depot.
Yeah, Home Depot, and there are maybe more detail than you want. Within each retailer, there are categories. So if you're in, I'll pick on Walmart again, there's a jewelry category, there's a housewares category, there's a clothing category. All of those different categories within a retailer have a slightly different setup, different attributes are required. For now, we don't really care. You're paying for the Walmart connection. You get all those categories.
It's unbelievable to me. I mean, it sounds dirt cheap.
Oh, yeah, you're getting an awful lot of value for that. But we've looked at this a lot. We know what we need to do this year. We know what the numbers look like, and we're going to be quite fine on the revenue side. That we don't have to. We're getting great margin as it is.
I'm gonna ask. I mean, do you want to share? I mean, what are the margins?
We've not shared that.
I kind of figured you were probably keeping that to yourself.
Yeah, it's good. We do get that question a lot. We'll decide this year if we're going to start to talk about margin, but it's healthy.
Yeah, I mean, typically, software as a service recurring revenue model, typically the margins are very high, right? Because you built the software, it's done. And then once it's done, the more you're selling it, the better the margins get, right? Yeah,
we do some initial onboarding with brands, and there's a higher touch engagement. You need to talk to our people. There is work that we need to do. But once that initial onboarding is done, it runs itself. So and so where we invest going forward, we want that. And the reason we built our website the way it is, I don't think a lot of people can go there and you could buy a channel, but there's API code that you have to be able to deal with. So there are some hurdles that a lot of brands can't deal with right now, and that's why our people have to get involved. I think where this industry is going, you'll be able to buy that connection through the website, give us your PO or credit card number, and you'll be up and running. So we built that out intentionally because that's where the industry, in our mind, is going. It's not a consultative relationship. Buy it, connect, go.
So it's, I mean, not a lot of engagement there, not a lot of babysitting.
Frankly, and I don't know if this will happen in my lifetime, but I don't want a sales team. I want that we can publish who the channels are, buy them, give us the money. I want it to be that simple.
All right. So Venzee's traction and KPIs. What do we?
So we'll update that slide for our next round of KPIs. I think we'll put it out probably February-ish, but we've already indicated publicly that we blew through our KPI targets for Q4 of 2021. We are going to update this slide so that we show KPI targets, I think through 2024. So we're going to add another 2 years to the back end. So we've had 2 years of hitting targets, and we believe we'll hit our 2022 targets. I mean, we'll see, but we're very happy with what we've got in the pipeline, and we're going to update those to show another couple of years out.
All right. So if I'm seeing that, so you've got 500, so 195,000, and that's 195,000 per month. Right.
MRR. Yep, exactly.
So you're looking at now for 2022, 500,000 is the goal. Right around there?
Yeah, it's higher than that. Not quite double that, but by the end of 2022, yeah, it'll be north of 500,000 a month.
Okay. All right. So I don't think I want to go, if anybody wants to look at the deck, they can go to the site and look at the deck, right? But I think we've given a pretty good picture of what the company does. I think you've given me a pretty good idea of what the goals are, but now we're going to talk a little bit about maybe not the best subject and that would be the current structure, right? The current cap structure. So
yep.
where I mean, and here is the chart that went on this crazy, incredible run that you guys had, and you actually had a nice little pop. What was this back in the first part of 2021? You got up to about 22 cents, and now you're kind of. Here's what's interesting. From a technical standpoint, you are now above the 200-day moving average, and you have. If you look at this line down here, this blue line is actually the 50-day moving average, which is sloping up, which is getting ready to potentially cross that 200-day, which I will let you know is called the golden cross. That's a very bullish.
We've heard about that. Yes.
Yeah. Bullish. That's a bullish pattern, and if it happens, that would be a very good thing, right?
Yep.
The problem with OTC stocks in general is volume, right? Liquidity, that becomes an issue, but you actually trade fairly decent volume I mean, there's some companies out there that trade 2,000 shares a day.
No, we move some volume. Yep.
Yeah, you've got some fairly decent volume, but let's talk about the amount of shares outstanding, fully diluted.
Yeah, so I think we're in the plus 300 million range. So there's a couple of things we're looking at, and we're not going to make any decisions on this right now. Warrants are being exercised on a fairly regular basis, which is a little bit surprising to me. When we're trading up north of 15 cents. Not surprising. People cash those in, but it's interesting to me that even at these lower price points, that there's still decent exercise. So plus 300 million shares out there. We're probably going to have to make some decisions about should we roll up at some level. There's always some risk in doing that, but we were an early stage company, and you issue shares and you take in some capital to afford the growth and build out of the tech and the team that we had to do. We're in a different place now. We are looking at bringing on a US based financial officer. Right now we have our financial operations are in Vancouver, and they've been very transaction focused, meaning just get the fundamentals of the regulatory and daily financial operation right-sized and managed, and that's been great. But we need somebody who comes on who has a different, more aggressive view of what we need to do to clean up that cap table, and we're going to do that. We're not ready to announce anything certainly today, but stay tuned. We're very pleased with the caliber of folks that not only are on our operational team, but if you take a look at our board members, we're sort of well above our weight class in terms of an early stage company with the pedigree of board that we have. So we're going to keep in that vein. We're going to hire some quality expertise on the finance side, and we'll address the cap table cleanup that we know has to happen, but is you're quite right to pick that out as a talking point, but it is the result of we had a founding team that we've since moved on from. We've pivoted into operations and targeting revenue and growth, and really pivoted this company into a performance based organization. So doing the cleanup from that early stage, that makes sense, and it's the right time to start that.
So, look, that's what happens. That's why companies go public, is to raise capital.
Yep.
Right? I mean, that's
Yep.
that.
Yep.
And sometimes these companies have to do the deal with the devil. Not exactly. They're not partners. They're guys that are looking to raise capital. They're looking to provide you capital at a cost, right? not friendly. I would not call them friendly capital. It's just as capital. And a lot of times it can be unfriendly, actually. So sometimes you have to do what you have to do, and it creates that bloated share count. But these are not things that are insurmountable if you have the right team in place to fix them, right? So, and does a reverse split sound bad? Yeah, but you know what? A lot of companies go through reverse splits. That's part of this, the way it is. And actually, after they go through the reverse split and you have that reduced share count, it can be actually a pretty darn fun ride if it's a strong company, right? So I view this as not, this is not the death knell. This is an exciting company that's growing very quickly, right? That has a massive addressable market at stable revenues. I mean, what does it take for you guys to get to cash flow positive, on a recurring basis, right? On a consistent basis.
We're not necessarily aimed at the break-even number. We do have projections that we're very comfortable with if we kept steady state and didn't invest in headcount or some other things. So we can get there if that is what we decide we want to do this year. We'll see. That given the pipeline and how we think the sales are going to progress this year, we're very comfortable telling our story. It's a growth story. If we need to do things to clean up the cap table, and I mean, let's just be candid, people want us to clean up that cap table, so we'll get after that with the right resources that know how to do that have expertise in that domain. So we're paying attention to the break even. We're paying attention to the cap table. We're going to bring in the right resources that our investors, who they've been very loyal, I have yet to feel that we took in capital in a deal with the devil. These are folks that bought into our story, supported us early on, and some of them have done quite well based on when they got in on our story. So we're very pleased with who's behind us, and we're going to continue to grow that investor base. Okay, so one last, are there plans, or do you have a desire to eventually uplist to a senior exchange? It's interesting. We've had folks actually reach out to us on that, which feels very premature. So we don't have any plans right now, but we have made some good friends both in Toronto and are cultivating some good relationships in New York. So it feels very early to me to engage heavily in any of those discussions. But interestingly enough, some folks have come to us, as well as some folks who have come to us that just want to buy the company because they know our tech and want to bolt that on. Right now, we're going to stay where we are. We're going to build this out through 2022. We're going to hit our goals in 2022. And 2023, I think we'll have more clarity on what path we want to take.
So right now, John doesn't have an end game in mind.
Grow the company, hit our goals for 22.
That's it. Hit your goals for 2022. Okay.
Yeah.
Because there are,
and by the way, if do we imagine other things? Certainly. I didn't get into this game because I wanted to run a company for the next 30 years. I got into this game because I saw an opportunity to grow a function in supply chain that could make everybody a lot of money. So, don't imagine I'm naive about this, but I also know a lot about operations and what doing operations well results in terms of opportunities that are presented. So we're going to hit our goals like we did in 2021, and we'll talk about how we look at 23 and 24 once we've hit those goals. Okay.
So right now we've got the stock sitting at right around 10 cents a share. How are you in terms of capital? Is there going to be a need in the next 6 months for another cap raise?
Well, the way our revenues are coming in, technically, no, but there are some things we want to do on the growth side, both with our AI, with our marketing, some of our presence in various global markets with big manufacturers where we want to spend some money. So if we want to raise capital so that we can more aggressively grow, we'll talk about that. There's nothing we need right now. We've got money in the bank. We've got revenue coming in. So we're in good shape. We are going to bring on a finance person in the US, which expect that in the first quarter. And then we can talk more about any of our financial planning, but we're good where we are right now, and no plans.
I can imagine you probably are getting a lot of here's the thing. You touched on it at the very beginning there's not a lot of people, a lot of companies out there that are AI in a supply chain space that is, front and center for everybody. So you probably have a lot of funds that are saying, okay, we found the guy, but we can't buy this guy because he's an OTC stock, right?
Yeah.
That's the issue. So they're like, let's get this guy on the NASDAQ, right? And it may be early, but I understand why it's happening, right? If you're one of the only players and you've got something that looks, pretty special, yeah, they're thinking, let's get this guy over there so we can start building a position.
Yeah, there are not 5 of us out there in the market. So
it puts you in a very unique position, right? So the way I view it, and this is just my personal opinion, so there's a couple of paths. Yes, you do wind up, getting doing an uplisting to the NASDAQ, and then maybe you don't even get the opportunity because somebody just comes and gobbles you up. My concern would be this would probably be too early to be gobbled up because they can't accurately value you. You haven't gotten to that spot yet. Does that make sense?
Yeah, the people that have come knocking know exactly what they would do with us. So it's not that they're trying to project the market. They know what our tech does and they know how to bolt it onto something. But I think that is really, it's a disadvantaged position for us from an exit path. So while there would be money and it might be decent money, it's not everything that we could realize if we hit our goals and grow this company organically.
Okay. So it's a smart path. I would be afraid that you would sell too early, right?
Yeah. And I'm telling you, when I left Cardinal to get into this specific space, we were bought within a year of my joining. And I stomped my foot. It was too early. And I believe that, but it was good money and the founder wanted out. We're not in that position right now. We get to have some say on whether we're going to exit. And the answer right now is no.
Okay. One thing I will say, I just signed up your investor alerts, and I have to tell you, most comprehensive investment alert email to choose from I've ever seen. And I've seen a lot of them. So kudos on that. I mean, the breakdown was amazing to me. I wish every company would do what you have on your site. As a matter of fact, I'm going to start sending it to people because it was fantastic. So listen, I think that, if you're interested in this story, and this is not investment advice, this is, every investment decision. I'm not a financial advisor, but I think this is a fascinating story. Are there challenges? Are there some things that aren't perfect? Yeah. But then again, the stock has actually got this formation from a technical, and the technical guys are going to see this. It's at a very interesting spot. It's at a very interesting spot. You have potential golden cross coming up, and it's a 10-cent stock. I mean, you know, to me, it makes sense to, you know, maybe dip your toe in this thing right here, right where it's at. Because I think you've got a very compelling story, and I think you're a pretty driven guy. I for some reason, I just kind of think that maybe you might hit your targets, right?
Yeah. We'll hit our targets.
All right, listen, I want to thank you. Hang around for a second. I'm going to stop recording. I want to just run a couple of things past you. Thank you very much for coming. If there's one thing that you want to say to close this out, is there anything that's on your mind that you want to really drive home?
Well, I was on the phone the other day with a Wall Street Journal reporter, and she said, let me get this straight. You are AI for the supply chain? And I said, yes. And she said, we need to talk. So I think, you know, we've got the right platform at the right time. We've got a great team, and we're looking forward to great growth.
All right, John, I'm going to continue to follow the story, and I wish you nothing but the best of luck. I like how transparent you are. You don't dodge anything. You know, the cap structure is not the greatest, but you know what? You're going to address it. It's not like you're ignoring it, right? So thanks again for coming on and telling your story. I'm going to help share your story. So, you know, I want nothing but success for you guys. All right.
Excellent. Thanks a lot. I enjoyed it.
Yeah. Let me stop the recording here. Okay, all you stock junkies, I hope you enjoyed the video with John Abrams from Venzee. Ticker symbol V as in Victor, E, N, Z as in zebra, F. If you liked today's video, please do us a favor and give us a like, give us a share, and how about giving us a follow? It is always greatly appreciated. Until next time, we wish you the very best of success.